What's going on, traders? Hope everybody's having a great week so far. Want to do a quick 5-minute update here on the S&P 500 SPX cash index, as we've had a violent move to the downside today. Markets, at least the SPX, down almost 1.6%. and about a little over 100 points to the downside. And although it did seem like a very violent move, and it was, overall we have not broken out of this balanced price range, right? So overall we have not displaced in either direction to make a new higher high or really a new lower low. So although these moves are violent in either direction, as you can see, look at this giant rally up just to get faded here. A lot of thin structure, but we are just going sideways overall. Okay, so let's go over the bull case really quickly here and see what the bulls would need to do, in my perspective, to gain some foothold back. We are under the daily 9, 20, and 50 as it stands. Okay, but if we do see a push back up, and I do expect that coming into this 68.30 area, we could see a push back to 68.84, 68.85. First area where we could see a short back down using that daily candle range theory. You've got 25% and 50%. This doesn't look like 25%. It looks a little bit more, but give or take, right? Either way, coming back down there, in that case, we would be looking to hit these lows and potentially break them and actually go ahead and make that true lower low, and potentially here basically matching these lows from back on the 20th of January and the 21st, right around the 6,800 even. Okay, the other case is, right, for the bulls, we want to see some daily closes back over 68.85. If in fact we do, we can see some candles like so, like so. All right, then maybe we have getting over 6,900, 69.20, the next big spot, right? And if we start to see some candles up and over 69.20, well, then things get interesting. We can come back, potentially retest. Then I'm going to be looking for the highs of the range overall, coming back into this 7,000. That's really been a headache for the bulls overall. And I have 69.88, but you can see a couple times we have broken over, and really I probably could activate this and bring it up a little bit higher for us here. And let's do that. Okay, and it's really obviously shown major rejections in each area, but overall balanced price range, so it all technically is meaningless, right? So over 69.20, as I said, then we'll go ahead and look for attacks of the upper part of the range. What happens there is anybody's guess. All right, for the bears, right, for the sellers, first area of rejection, right, we talked about the 68.84, can reject right here at this place to make that lower low, or another area is coming back up into the 69.15, 69.20, then maybe we bounce, then maybe finally we do break down, maybe another bounce. I'm just making this up, but there's another potential pathway for the shorts overall. So things really get interesting for the sellers under 67.65. Then we can look to these lows here back from mid-December, December 17th, right around here. So that's around 67.15 thereabouts. So if we break underneath that 67.65, that's when things get interesting. But until then, overall, we are still just heading sideways. The other thing I just wanted to point out as we close out the video here, okay, look at this big trend line I am watching here on SPX, and we are coming in again to it. I'm going to come out here. Boom. Okay, so you can just see a broader picture, right? We've had basically this wave up, now possible ascending triangle. No sweep of the highs, but once again, back at the area, right at the trend line. Do they break under? That's the big question right now. If they do, and you don't want to play the bounce play, wait for that break and then come up and retest, and then we can talk about those lower areas on the chart. But until then, big spot here. That's another reason why. Would I want to be a new short right here at the trend line? Not particularly. So let's see what we get. I hope this helps, and take care.